All right. I hope everyone is having a great weekend. I'm looking forward to another update here on all of the markets, starting with Bitcoin. We'll do a little low time frame, high time frame, and then move to ETH, move to the miners, and I'll just use Mara for that. Then we'll move over to traditional financial markets and look at the dollar, look at yields, look at gold. And then we'll call it a day, okay? So not a ton to update from this video compared to last weekend's video on the high time frame for Bitcoin. We continue just to consolidate beautifully above our accumulation zones. And I've got the weekly chart up here on Coinbase for Bitcoin, and you all that have been following me have been seeing this chart for some time now. I started doing these videos for those that are new to the channel in this area right here, okay? That's the area where I had started to use this chart to illustrate my point. And the point in the introduction to this video to lay the groundwork for looking at any of the low time frame stuff, which is just noise in my opinion, right? This is the price action that dominates what's, in my opinion, and I'm not a financial advisor, remember, don't take this as financial advice. Do your own research. I'm just speculating. Nobody knows what's going to happen in the markets. I have a strong belief. I have a strong opinion. I utilize data to inform that opinion and probabilities. And in my mind, we've just started the early stages of an expansive move, and that trumps anything else that I'm going to see on the low time frame. That trumps anything else that I'm going to hear about what Bitcoin needs to do or what it should do before the halving, or what it needs to do in order to make everybody happy, right? In terms of getting retests down at that 31K level, which I don't believe we're going to get, or whatever that speculation might be, okay? And so just to remind everybody, this is the lens at which I'm approaching what I believe is to come, okay? What I believe is to come, much like back in 2020, what powered this move was what had preceded it. And that was a massive accumulation event marked by a spring. And what I love seeing in retrospect, you don't like seeing them when you're in them because they feel awful, in terms of Elliott wave and the wave of emotion as it corresponds to what you're going to see to validate the price action, right? And so, at these two levels, the news is the worst. These corrective two waves where the market participants think it's over. Much like at the bottom of these four waves, the news is the worst. The market participants think it's over. And typically in these final capitulation events, you see springs. And I've illustrated that many times before, utilizing the Wyckoff accumulation 1 schematic, right? Not every accumulation has a spring, but as you can see, a spring then changes the trajectory and character of this market prior to moving out of its accumulation and into expansion. Much like the spring COVID lows, the world is going to end, right? And that changed the trajectory of the market. V-shaped recovery began the later stages of the accumulation, and then it moved into expansion. Much like we saw at the FTX lows, and mind you, this wasn't just the FTX lows. This was not just the FTX lows. We had a nasty correction in the broad traditional financial markets. We had one of the steepest, fastest rate of change moves in interest rates that we've ever seen in history, one of the most parabolic moves in the dollar that we've ever seen. And yet, what did Bitcoin do? Bitcoin made its capitulation spring right into the context of this trend line that goes all the way back to 2019. And since then has finished its accumulation, exited accumulation in March, consolidating, and we just entered expansion, folks. We just entered expansion. And so that's the lens at which my bias operates at this moment, is that we have just started expansion, which means on anything low time frame, I am looking for shallower dips and followed by stronger rips, so to speak. Okay, that's what I'm looking for. That's what we saw in an expansive move here, right? We most certainly saw 5, 10, 15% drawdowns along the way in this move back in 2020 and 2021, but those were quick and they recovered fast, and they led to continuation and impulse moves more time than not. Okay, and so what level are we at right now, and why is this such an important level, and why is this consolidation bullish? Let me get rid of this chart for now. Well, for a few reasons. Okay, for a few reasons. And reason number one, look at where this volume has traded. And I may have gone over this last weekend, and if I did, I apologize if it's redundant, but this is just really important. This is volume by price, VRPR, okay, what I have up here, which is simply to say the volume at certain price levels. And so when we look at what I'm calling accumulation ranges, massive accumulation range, did we see any volume to confirm that happened? We sure did, okay? Massive accumulation range. Did we see any more volume than normal to confirm that's what was going on? Yes, we did, right? Biggest volume bars, biggest volume bars. And you see those in places you'd expect to see them with massive accumulation events. And so what are we seeing above this level? This last volume bar, the last big volume bar was capped at 31,000. Is that a big surprise? How hard it was for us consolidating below it to finally get out above it? It was a little bit surprising to me. I'm not going to lie. I was expecting expansion to start much earlier in the summer, and yet it can continue to consolidate, and move out a few months later than I was expecting. But I digress. The market does what it's going to do, not what I want to do. So what's of importance right now? Well, what's of importance is why I believe the market is trying very, very hard to keep a lid on price at an important level. And I don't mean a manipulation, right? I just mean the participants are negotiating very, 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 very hard here, because price can start getting away. And for those that aren't done accumulating coins, they want more time, more time, more time. Institutional investors aren't like me or you that are going to say, oh, I want to buy this and I'm going to YOLO and buy, 25% last week, 25% this week, 25% next week. And then my final allocation next month. Or like most of retail, just, hey, I'm going to lump sum buy it and hope the price goes up. They like to accumulate over time. And so time is running out here. What do I mean by time is running out here? Well, let's just look at this area, the last major volume bar, okay, where we are, where coins have transacted and where our price currently is stuck is in a very important range. Okay, it's in a very important range. We can see this area denoted our 3, 4, 5 into that major third wave. We can also see, what else can we see here? We can also see this area acted as resistance and then was busted through, and then that corrective all-time high, right? So that this is an important area. Same with here, right? Negotiated with this area, breakout, that was a fake out, and then was the beginning of more downside in May 2022. So this area is kind of like the line of demarcation, right? Above it, and things and the market starts to move very quickly, in my opinion. And below it, that's when most of the market's validated in that most of this action in their minds has to happen after the halvening. Yeah, you get a little bit of a bear market rally before the halvening, but once you're above this level, 42, 43, then the market starts to induce FOMO, okay? And I think things move really, really quickly. Which isn't a surprise that there is a lot of negotiation going on in this region, all right? But for now, if we're just observing this weekly, this is just vertical accumulation, beautiful structure. Let's bring up RSI. I want to see this RSI. I always want to see this RSI over 70 during expansion, and that's where it is. Okay, still at 75 on the weekly, just fantastic. Just all the hallmarks of a early stage expansive move. And so with that, let's move to the low time frame, and that was just a frame. That was just a frame. Who cares? Who cares what happens on the low time frame? Even though I'm going to speculate on it, and I care as well, right? I'm human. We all want to see price move in the direction we want it to move as quickly as possible. All right, so a new look at this is a 4-hour chart, and this is the price action since the end of October until now. Okay, and being that I'm such a fan of Wyckoff, and Wyckoff accumulation events take shape in many different forms. Sometimes you have spring events, sometimes you don't. And in the context of this vertical accumulation that's been going on, right? I mean, that's just all this has been. Vertical accumulation, right? Pretty clear to see that. In the context of this vertical accumulation, there have been, in my opinion, two accumulation events within the context of this vertical accumulation. And I've kind of illustrated that here, and I'll go over it pretty quickly. But as you all know and have followed me with my explanation of Wyckoff, you see a lot of it in Bitcoin, right? You get some type of selling climax after an impulsive move, and now we're working on low time frame. An automatic rally, a standard test, a secondary test in phase B, and then work your way up back to a last point of support, another last point of support, consolidation, and then it moves up and out of the previous range into the sign of strength region. You can get a backup, a correction into this last point of support prior to expansion. And let's see what we see with these two events as I've got them outlined. Well, we have a selling climax, and this is after, right after this move up. You get this corrective move, and this is probably like an A, B, C, but I digress, right? Selling climax kind of comes back up, a little rally, and then secondary test in the second phase, in this phase B, come up and out of it, consolidate. Oh, the market's going to move out. No, it doesn't. LPS, and the last point of support in all this price action is this, right? And then we get one next move out back to the last point of support, which is now all the price action that preceded it. Okay. And then sign of strength, market's going to move, right? But nope, back up to this last point of support prior to expansion. Okay, now let's see what we have. Now let's see what we've got going on here. And I'm seeing a lot of the same thing here. So we have a move out and then selling climax, correction, automatic rally, which is at AR, secondary test in phase B. Oh, now we're really going. No, we're not. Back down to test, consolidation, back into this last point of support, up and out, last point of support. Oh, it's on, break 38, sign of strength. No, it's not. Back up, LPS. And then that's the type of action that preceded the true expansive move. Okay, so that's how I'm viewing this. That's how I'm viewing this price action on the low time frame. We are, in my opinion, in this backing up at the last point of support region, much like we were back in early November prior to our next move out. And how do I envision this next move out, if in fact that's what's going to happen? Unfolding. Well, let me pull up my next 4-hour chart. This is my count on the 4-hour. And this is just looking beautiful. This is just looking beautiful, right? We just have a series of impulsive moves. 1, 2, 3. Oh, excuse me. 1. Okay. 1, 2, 3, triangle correction 4, and I believe we just initiated 5. Okay. And within these impulses, there are also impulses and corrections. And so let me zoom in to kind of take a look at what's going on, in my opinion, on the low time frame, folks, on the low time frame. So on the low time frame, when we break down this last impulse from 2 to 3, we have another 1, 2, 3 consolidation triangle 4 into 5-wave move to mark this third wave. Okay. Now, what I'm concerned with is, what is the character of the price action from 4 to 5? What is the character of the price action in this region? And do we see any similarities? Okay, well, we did see a triangle type correction, right? A, B, C, D, E, and then it made an impulsive 1 right at that previous all-time high level, mind you, faked everybody out. Oh, swing failure again, it's going back down, only to be caught at the 382 retracement of, and this is 1, 0, so 382 retracement to mark a 2 minor prior to going into 3, 4, and then fifth impulse was a 4.23 extension off of this one coming off of the E low. Okay, so what do we see now? What do we see today? We see very, very similar movements, in my opinion, right? We've got this E that I've got in correction complete. Could be wrong. First impulse, deviation, fake out, swing failure pattern. A lot of shorts are going to pile in and start looking for entries. And then this morning we get this little dump right into the 618 level. Mind you, this one came all the way down to the 382 level. So even coming down to the 382 level, 36.7 would still mimic what it did, during its last move. But now I'm liking this wick reaction on the 618, and this would be the perfect beginning of this third minor impulse. It takes us to 41, 41.5, 41.2 area prior to a little consolidation, and then into 42, 43, that area prior to, and that would just be the first, second, third, fourth, and I'm calling for low 50s in a matter of weeks on this next move, folks. Let's call it what it is. It's pretty aggressive, I understand, but that is how I'm interpreting and how I'm reading the past in the high time frame. That's what guides everything else that's in front of me right now on the low time frame. And the fact that we've been consolidating in this range for as long as we have this important range tells me that if we do get up and over this 40, that a move to 50, 52, 54, 55 is going to happen fast, in my opinion. At which point, I would not be surprised we get a correction into that 46, 48 level. And then that's where I see the ETF news coming out, folks. In that area, 48, 50s, 55, 60, something like that. And then we go from there. All right. Next, ETH. I mean, ETH just looks, you guys have seen my high time frame charts on ETH, okay? I'm not going to go through that again today. We've got what I believe is confirmed breakouts on the high time frame. I'm looking at the low time frame, and I've got this yearly high outlined here. Yearly high, this level. So this has capped the entire upside basically all year. And let's just observe what price is doing. Okay, 1, 2, 3 ran into the yearly high, falling wedge correction. And now, why isn't it dumping? Why isn't this dumping? That's telling us a story. This is telling us a story. It's simply consolidating, literally just consolidating above under resistance. And that is bullish in expansion. That is bullish. This, in my mind, is searching for a what we call the God candle, right? This is what that is looking like to me. I could be wrong, but that's my interpretation, folks. And that would not shock me to see a violent move in a matter of a day or 2 days into the 25, 26, 27 $100 range to kick off ETH's first move that I think takes us first major move into 2,800, 3,000, something like that in short order. Okay. Next. What do we have next? Let me get rid of this. Let me get rid of that. Let's go tomorrow. Okay. This is going to be a quick update, folks. Mara, the miners are all looking fantastic. There's just no way around it. Okay, I've got the logarithmic MACD here. We can see we haven't even had a green bar. Most of these miners have been up 50% since the October lows, 50, 60, some of them 70%. And here we are, not even a green histogram on the momentum. We've got a pending cross on the weekly. So I'm going to get rid of that now so you can see the rest of this chart. Sorry about that. There we go. Okay. All right. And so looking at what do we do this week that's of importance, that's of very much importance. We got out of this cloud for the first time, and we closed near the high of the week. That's a very, very bullish price action. This is indicative, in my opinion, of early stage expansion. And so the next 2 weeks, I'm looking for a move substantially higher from where we are, somewhere between 16 and possibly 25, 26, 30 in the next several weeks would not surprise me in the least, as I believe we are kicking off this third wave move, which is the most powerful. Very much looks to me similar to what we saw back in November, December of 2020, where, and mind you, folks, these moves in miners, they in the past have happened very quickly, right? Where the November 16th of 2020, Mara went from 235 to 350. Then the following week went from 370 to 624, doubled in 2 weeks. So some of these moves can happen very, very quickly. Don't try to time these with options. This is purely just me, pointing out past price action and what potentially I think could come quickly. But nothing but bullish behavior coming out of a major correction in the miners. That's the update on the miners. Okay, what's next? SPY. All right, the SPY daily chart, what does it look like? It looks like a correction is coming, right? It looks like a correction is coming. Why? Because look how far we've come. We're so overextended, right? Look at this. We're so, it's an incredible move. It's one of the best top 4 moves in the month of November I think the market has ever seen. Here's the problem is everyone's looking for a correction right here. Everyone is looking for a correction right here. And so do I believe that the market is going to give everyone what they're looking for, that have missed this lockout rally that most have been sidelined for? I don't. Does that mean a correction isn't coming? No, it doesn't. It means I don't know what the short-term moves are. And that's not what I'm here to speculate on. I'm just pointing out that in moves of such magnitude that have happened as quickly as they have, just like to the downside, it can go a lot further than you think. That same thing can happen in the upside. And so my count calls for a little bit higher on SPY, 460, 470 region before any type of correction. And that correction might take us literally right back to where we are right now, which is, the exact definition of a lockout rally, right? For those that sold last week to not get in below where they sold, that's the definition, right? That's not saying a correction isn't going to happen, or a correction even starts this week, right? Where we get a week or two of weakness to consolidate before a year-end rally. That's most certainly possible as well, where you got this descending, broadening wedge type formation, which are really bullish. But you also do see in these wedge type of movements, you get retests and go a lot, right? That's a pretty common pattern. So that's also something that would not surprise me in the least. The takeaway here for me is, for folks that are just long-term investors, I believe the meat of this move is in front of us. I believe in the meat of this move is in front of us. The path is always uncertain, and that's all I'll say about that. Okay, next is the Nasdaq chart. And again, what we have here, folks, is the illustration of things you see at the beginning of moves. Okay, you've got a pending cross and the first green histogram on the weekly on the Nasdaq. And so does that mean it's going to keep ripping? No. Can you get crosses? Can you get crosses and then followed by red or sideways? Sure. You saw that here, right? Can you get a cross, right? Can you get a cross and a green histogram followed by a red week? Sure. The point is for me, this move is just getting started. Okay, this move is just getting started in the context of what I believe is in front of us. Could we get a red week consolidation prior to movement? Absolutely. Could this thing continue to just move and lock people out? Absolutely. I don't know. At this point, I'm 50-50 in terms of where I think that what might happen in terms of low time frame. High time frame is where I have the most confidence, and I see us very similarly to where we were in this range. Okay, where the meat of the move was in front of us. I believe the meat of this move is in front of us. Okay. All right. Next chart. What do I have up next? Oh, the dollar. I am really looking forward to this update. I haven't done a deep dive on the dollar in a long time. You all have seen me speculate on reversal areas for weeks. And we got the reversal we were looking for back in early October. Now let's line this up with Elliott wave movements and counts, and we're more focused right now on Elliott wave corrective movements. Okay, ABC corrections, and in these A legs, right? A, B, C, you can get 1, 2, 3, 4, 5 in impulsive movement in that A leg. And I want to compare what we're seeing now to what we've seen the last 2 times risk assets were at key inflection points prior to major runs. Okay. And what are those areas? Well, those areas are highlighted here. Okay. Bitcoin did a 10x when the dollar was in that structure and moved to that structure. Bitcoin did a 7x when the dollar was in that phase of its corrective structure and moved to the bottom end of this range. The Nasdaq did 50% in this area. The Nasdaq did 150% in this area. Now, that does not mean that what I'm going to share with you next is a guaranteed for Bitcoin to do any X or Nasdaq to do any X. I'm just looking for similarities and confluence in building my story and building my thesis. That's all. And what we saw back in 2017 was an ABC, clear ABC. What we saw in 2020 was a clear ABC, very clear. Okay. And within the context of the A wave, we had 1, 2, 3, 4, 5 movements to form this A. Okay. In the context of this A wave, we had 1, 2, 3, 4, 5 movements to form this A. Now, when we went from 3 to 4 and confirmed that 4 correction was over on the way down to 5, at this point, Bitcoin did a 10x to its cycle peak, and the Nasdaq did 50%. When we had a 3 to 4 correction and it initiated its next move down to its 5th to complete A, Bitcoin did 7x and Nasdaq did 150%. Where are we now? Where are we now, folks? And now I zoom in after digressing a little bit, getting a little excited, right? Getting a little excited, slow it down. All right, so what I have here is a much more complex, and shouldn't it be more complex? Game mode gets harder as time goes on. Those were fairly standard looking ABC corrections. This is not, right? Where, in my opinion, we have an A, B, C down to the bottom end of this range. That's how I'm visualizing the high time frame. Whereas this A leg, we have 1, 2, 3, 4, 5. Okay. And this 3, 4, the illustration of what it looks like is up here, which is a pattern seen in 3, 4 corrections where you have an A, B, C, D, E broadening type of wedge structure. And that's how I'm visualizing the structure in front of us. Okay. As an A, B, C, D, E. And now 4 is complete, moving into this 5. And so is this a coincidence that we've completed this E? Bitcoin has been up 35% since. Nasdaq has been on a tear. Markets have been on a tear. I don't think it's a coincidence. But what I care about is this move appears to be just getting started, if in fact this is what it is. And we don't know that that's what it is. We can't read the future. But again, if it follows a similar trajectory and path of previous macro high time frame corrections, that's a possibility. Okay. So that's the view on the dollar. Let's keep it moving. Yields. So I got the weekly chart on the yields. You all have seen this structure illustrated for some time. I was looking for a bounce at this trend line of this ascending triangle structure, right? We had some bear divs on RSI and logarithmic, or this is standard MACD. No, this is logarithmic. Let's pull up standard because I don't have this chart in log. This is linear. So we'd need to do okay, that's not the one I wanted. There we go. All right. Yeah, so we still have what we're looking at here, right? We're looking at this divergence playing out as well. And on the weekly, this tells us potentially the momentum on the downside is just getting started. Now, could this be a fake out? Absolutely, right? And that's why I had this line drawn out and said, you know, until we get, you know, something like this, this still is a bullish structure, right? But just looking at this objectively, that also is a possibility. My bias is to the downside. My bias is to the downside, but we always need to be aware of the other possibilities as well. Okay. And what's next? Gold. And gold continues to perform as we've been tracking it and expecting it. On the weekly, let me throw up the 30-week moving average. Reclaim of the 30-week last week. Love to see that. And from a pure, again, let's just look at this from a pure price action standpoint. Where is price right now on gold? Let's just look at it. I mean, so this region has literally capped the upside since summer of 2020, and you're at the high of this cap. You're at the high of this cap. To me, this just looks pre-breakout. To me, this looks pre-breakout. I don't know how else to put it. We had the nasty washout, and that would be my expectation. Anything is possible, of course, but that how I'm interpreting this charts, I don't see very often 1, 2, 3 triple tops, and then you make a run back and you don't go. I just don't see that too much in technical setups. I could be wrong. I could be wrong as well, but that's how I'm reading it. And that is a wrap for the weekend market update. I hope you all enjoyed it. If you did, like and subscribe to this video. Thank you all for the support. I appreciate it and look forward to doing this next video next. Or actually, I won't be doing it next video. I'm on vacation next weekend. So I will catch you some other time prior to or following my vacation. Take care.